Hey all, welcome to ShareTreck. Today is the 21st of March 2022 and the Monday, the beginning of a new week, and I'm really happy to get started, especially because Friday was so nice. Everything was green, and even as early as Saturday, I was looking at the futures and they were green. So everything looked good. So hopefully that transitions into a little bit of positive sentiment and sentiments to begin this week. As usual, this video is going to consist of three parts. The first one is going to be basically overview of the macro environment that's likely to impact the share prices in the near and longer term. The second part is going to be a technical analysis of VIX and the NASDAQ. And the third part is going to be a technical analysis of all of our genomic shares with an idea of looking at potential near-term price movements. So having said that, I hope you had a great weekend and you're ready for this week. Let's get started. Let's get started off with the overall market outlook. Following the Sunday edition, there are a few points that I did not mention there, and in fact, they don't stay at the top of our mind because the way the market moves and the news and events happen, we kind of lose track of things that are not immediate. So in terms of what is exactly relevant to the genomics shares, more particularly, we have risks that still remain with regard to FDA approval process for genomic front-runner candidates for CRISPR therapeutics and Vertex. We have got CTX001, and then we have Beam Therapeutics also with the sickle cell treatment. So those candidates, there is still the risk that they may or may not get approved. So we need to be cognizant of that factor. And apart from that, there are a whole lot of pipeline candidates for various genomic companies that are going through the FDA approval process. And there is a success rate and there is a failure rate among them, which I discussed in my earlier video with regard to the FDA approval process and the probability of success for each drug candidate. So those probabilities still remain. So some drugs could be dropped off from the pipeline for lack of either greater efficacy than what is already in the market, or for the lack of proper results that satisfy the FDA. So those things remain. Having said that, off-base edits is still something that needs to be handled and demonstrated comprehensively in the clinical trials for any therapy. Likewise, GVHD, that is graft versus host disease, and other immune response related risks still need to be consistently conquered in clinical trials. And equity dilution is still possible for many of these companies because they may run out of money before their pipeline gets approved. And IP grant risks are still out there in the sense that those companies which did not derive their IP from Broad Institute, they still have a risk in front of them on how to legitimize the subsequent developments that they have done based on those IP that they got from another party. And also for those who got IP from the Broad Institute, they still need to anticipate a potential challenge in the federal court by the CVC. So those things are still out there, which we should not lose sight of amidst all the noise that we get from the market. The other thing I want to talk about is going to be basically about the overall economy in general. And one of the things is that we need to note that even though we have broken out of the resistance of the bearish channel when it comes to NASDAQ, markets do not move up in a straight line. So for a couple of days of upward movement, there'll be some profit taking which pushes it down. And then there'll be the fear of missing out where people will suddenly swoop in to take shares and then it goes up again. So those kind of zigzag movements have always characterized the market for decades and decades, and right from the beginning of markets. So they will continue to be there. So we have to remember that. And the potential of a recession cannot be ruled out. If you recollect the Cathy Wood's video that I critiqued earlier in one of my weekend specials, Cathy Wood had positioned that during the COVID crisis, there was a supply chain shortage that happened, and because of which, even though the demand was not very high because people didn't have income, the supply being low, it created an inflationary situation. And then subsequently, when the government gave COVID-related subsidies to individuals and companies, there was more demand generated, and still the supply chain bottleneck was not yet resolved. If you recollect, there were huge bottlenecks around the two main ports in the US, and goods were not coming in smoothly. And as a result, the government had to take special measures in order to streamline the process of letting the goods from the ship enter the country and go to the warehouse. And now the proposition at that time was that once all these things get resolved, there's going to be a huge amount of inventory, and there won't be sufficient demand to take it off. So that could lead to recession. So we still have that recession issue hanging over us, and we should not forget that. And what happened during the supply chain bottleneck was that in order to satiate the local demand, many companies tried to change their suppliers, and they went out of China and into other places, and those places did not have the necessary agreements with the United States, and therefore the movement of goods through the customs chain and other things were not as smooth. So they had to be ironed out. So there's a whole lot of things that happened where companies scrambled in the background. Many over-ordered also in order to make sure that they have sufficient components, especially in the automobile industry and other places. There were some automobile companies which had manufactured entire automobile units with just the chips remaining to be put into place. So when the chips come in, they are going to come out with a whole lot of inventory in a very short notice. So those things which we discussed about earlier, we shouldn't forget. They are not gone. Potential of a housing crash in USA is another new risk that I am seeing, because I have been looking at what is happening down south, and the migration due to COVID led to people moving from California and New York into places like Florida and Denver, Colorado, and other places. And the real estate prices there went up. And in response to that, builders started building more units. And now what is happening is, with the COVID restrictions and others being taken back, people are moving back, I think, to California and New York and other places. And also we have got the interest rate hike coming up. So the cumulative effect of all of this is going to be lots of units in the market, and many people not being able to pay into their mortgage because their equity is much less than the value of the house. And as a result, there is likely to be a run up to foreclosure. And some foreclosure statistics that I have seen point towards a rapid increase. They were masked a little bit because earlier government had done something called as forbearance, where they had allowed mortgage companies to let homeowners postpone or delay payment of monthly mortgages, and that forbearance has come to an end. As a result of which, whatever weakness was there in the ability of homeowner to pay mortgages is now being exposed, and we have seen a ramp up in foreclosure applications. So that doesn't tend to be very well for consumer companies, because many people had used their house as an ATM, because when house prices keep going up, the equity of the homeowner in the house goes up, and the mortgage seems to be a smaller percentage. So people refinance their homes, take more money, and then use that money to buy a car or a boat or go into vacations and stuff like that. So now those things are going to come to an end. So that's the kind of effect that a potential housing crash in US can have on the overall market. So we shouldn't lose sight of that. The Russia-Ukraine crisis is still in play with unpredictable outcome. So we don't know what's going to happen out there. And we have to be alert for anything that happens in that war theater. People are not talking about the precarious state of the Iran nuclear deal. And at this point of time, we want to have more oil. And the oil prices are quite high. So we can't lose track of the Iran deal that the previous government walked out of. So we don't have inspectors in Iran, and those things have got to be put into place. And that is kind of getting muffled beneath the weight of the Russia-Ukraine crisis right now. So the other thing that we need to know is the COVID numbers are still high, but overall no one seems to care. So my friend Mike is visiting me from Ireland for St. Patrick's Day. He had a long weekend, so he came here. And we went out for dinner on Sunday, and we also went out on Saturday. And the restaurants were full, and we had to wait for 30 minutes before we could be given a table. So we left one restaurant, went to another, and there also we had to wait for 30 minutes. Finally, we got in. But what I saw all around me was that the economy is back in full force. People are spending money. They are back into entertainment, and various governments are taking away the mask mandate and other things. So would there be another wave of COVID? Because the COVID numbers are still very high, even in Toronto for that matter. But no one seems to care. So we'll have to wait and see what happens out there. Midterm elections are coming in the US, and we still don't have a comprehensive resolutions to the 2020 election issues. It's a known fact that the election didn't have any fraud or anything, and that it was a legitimate election. But we still have the ex-president stirring up the stolen election issue. And if the Department of Justice is not going to step up and do something in this regard and either comprehensively counter these arguments, what we are going to have is that the midterm elections are going to come in, and the Senate and House may change hands. And we would have a situation where the previous president is going to say that the Department of Justice didn't have anything, and our claims of election fraud were true, and we need to get back the House and the Senate and the White House. So those dynamics will come into play and make the situation even worse. So at this point of time, inaction from the Department of Justice is creating a whole lot of risk, not only for the US, but also for adjoining countries like Canada and Mexico, and overall to the world when it's extended as the US is the leader for the world. So all these risks are out there. When you look at it totally as an investor, you can see whether you're a conservative or a Republican or whatever, anything that happens is going to impact the market, and we don't want that to happen. So we need some resolution in those fronts. So we cannot afford to forget those things. However, it's not all gloom and doom. This is what the market has priced in my opinion, with regard to interest rate hikes. So in April 2022, we are expecting a 25 basis point hike. That is next month. That will take our interest rate to 0.5%. Then in May, we are looking for a 25 basis point hike. That will take us to 0.75. In July, we are expecting a 25 basis point increase rate in interest rate, and that will take us to 1%. And in August, we are expecting a 25 basis point interest rate hike. That will take us to 1.25%. In October, we are expecting a 0.25 rate hike, and that's going to take us to 1.5%. And in November, we are looking at another 25 basis point interest rate hike. That's going to take us to 1.75. And finally, next year in January, we are expecting a 25 basis point interest rate hike. That is going to take us to 2%. This is what the market is expecting. Any deviation from this is going to either push the markets up or down. So for example, if the Fed doesn't do a rate hike in April, then that's going to be positive for the markets in terms of their expectations, and the share prices will go up. And however, if the commentary along with that is that we are looking at a recession, then that is going to have a different kind of an effect. So we'll have to wait and see what happens, but this is what is priced in by the markets. And that is the reason why we saw those increase in the NASDAQ and lowering of the volatility, because the risk factor has been reduced by putting this expectation in place. And this has crystallized as an expectation that the Fed is going to be matched against. So as and when the Fed comes out with the meeting next, we have to keep this at the back of our mind so we know what's going to happen with the market. So having said that, this was a very long overview commentary. I do not have any news items to talk about, and therefore I'm going to go on directly to the NASDAQ and VIX analysis, because the market is open. It's now 9:50 a.m. Let us see what the market has in store for us. So let's start with US oil. US oil is up around 5%. And that's not a good thing for us, because whenever the oil price goes up, it's going to weigh in on inflation, and it's also going to increase the volatility. And you can see that the MACD is turning towards the signal line, showing a good deal of strength in this move. And also our RSI is pretty high. It's above average momentum. So Overall, it looks like oil is going to be the spoiler today for us in the market. So let's look at what's happening with the VIX. VIX has bounced off the support at 24.28 and also the 100-day exponential moving average, which is at 24.43. So those twin supports are helping the VXN to stay high. However, one of the aspects that we need to notice is that we are still above the closing of yesterday's VIX, and we are still within the red candle from yesterday. I would have rather preferred that we had gone out of the candle in the downward direction. That would have been a much better outcome for NASDAQ, but this is what we have here. The MACD is absolutely bearish, and the momentum is picking up and looking towards the being average and above. So I think that the momentum of the market indicates that the MACD is also going to make a turnaround. Let us look at what VXN is looking like. And VXN is also looking equally bad. We have got a 4.61% increase in the VXN. So that's going to weigh in on the NASDAQ. And NASDAQ is down minus 0.24%, which is a very modest down. However, it has gone below the 50-day exponential moving average, which is this green line that you see here. And it stands at 13,861.94 right now. Whereas our NASDAQ is at 13,855. So there's a very slight resistance out there, and we just got to overcome that. MACD is absolutely bullish. The momentum is flat, but above average. The flatness of the momentum is what worries me. The fact that it is above average is a good positive. So there's a good chance that we may have a bit of positive outcome for NASDAQ today. But given that we have had a whole bunch of days when we have had green candles, there is a chance that either later today or maybe tomorrow, we may probably turn down a little bit so that people can take profits before we challenge the resistance at 14,227. So there should be a little bit of volatility ahead in the next few days. That's what we need to look forward to. So here we have our genomic shares on the right panel. I have sorted it according to the most profitable ones on the top, the ones that are doing really good. So Vertex is at the very top, and it's still got a support at 248.18, which is this horizontal line. And it's going to face a resistance from this diagonal line, which was a support earlier for the bull channel. Since we fell out of it, it has now become a resistance. So once we break above that, we'll be back to the original track. The MACD is bullish, but it's moving towards the signal line, and the momentum is pretty good, and the RSI has plenty of room before it becomes overbought. So I'm looking at some more gains for Vertex, but there's a good potential that we may experience some profit taking towards the second half of the day when it comes to the shares that are profitable today in the genomic sector. Now let's look at Pfizer. Pfizer is up 0.35%, and it's trying to break through above the support which was there for the previous bullish channel, and which is now acting as a resistance. So yesterday we tried to break through and we ended up on top of it, and today we are above it. So hopefully, if we manage to continue with the momentum, the MACD is still bullish, though it is tending a little bit towards the signal line. The momentum is also pretty good, so we should look forward to cementing this diagonal red line as a support and getting back into the bullish channel by the end of the day. So that's what I'm expecting for Pfizer today. And let us go to Novartis. Novartis is up 0.28%, and we have converted our earlier resistance of 86.48 into a support. So I'm going to convert that into a green line to say that it's a support. And we have a resistance for us, which is going to be at 87.04. And right now we are exactly at 87.04 and trying to move above it. Our MACD is bullish and continues to move away from the signal line, as we can see from the histogram. Our momentum is also above average, so I'm positive that Novartis should be able to convert 87.04 into a support for the day if the current momentum persists. So that said, let's go on to look at Regeneron. Regeneron is up 0.38%. That's $2.61 up. And as you can see, this is a very steep raise that Regeneron has got. And each of these candles is still a one-day candle. As you know, I look at the long-term charts and look at a daily candle out here. I can see that the MACD is moving towards the signal line slightly, but still there's a long way to go. As always, Regeneron is overbought and it's kind of moderating away. So we could expect a little bit of negative by the end of the day for Regeneron. So maybe instead of ending a positive at $3.5 or something, it may end up positive maybe $1 or so. So there's going to be some amount of sideways movement for consolidating, and then it will continue on its way up. So that's what I have for Regeneron here. Illumina is down minus 1.07%, and we have got our 50-day exponential moving average still as a support for us, and our 9-day exponential moving average is trying to cross the support of 330.25. That's also a good sign. MACD is absolutely bullish right now. However, the momentum is above average, but still pointing downwards. So the fall in the momentum is a bit of a concern for me when it comes to Illumina. And I think that probably Illumina is going to suffer a little more loss today before the close of business. Let us look at Bluebird Therapeutics, which is down minus 1.3%. And it's supported by the 9-day exponential moving average. MACD is bullish, however, the momentum is below average and dropping. So Bluebird is likely to lose a few more cents before closing for the day, and it will close in the red or flat. Allergen is down minus 1.95%. That is around 19 cents down, currently at $9.57. So we have a resistance at 9.93 for Allergen. The MACD is bullish and the momentum is above average, but it's dropping. So the fact that the MACD, the momentum is dropping is what is causing me a concern, because that will push the MACD downwards. When we look at overall technical analysis, what we are trying to accomplish is that given that we do not know how the market is going to go, we are trying to do a read on how the participants are reacting at this point of time. And that read is coming from this chart out here, bar chart, which is showing us that the price that the participants are paying at this point of time to get a share. And that's what creates all these candles. So we are taking that into account. And when we look at the MACD, it's basically two exponential moving averages which are contrasted against each other. One is a short term and one is a long term. So as we know, the short term moving averages move very sharply and track much closer to the current price, whereas the longer term moving averages smooth out the sharp moves, and they track to the current price, but not very, very sharply. They show a emerging trend. So when you contrast both of them together, you can see how strong the price action is. That's what we do with the MACD. So right now the MACD indicates to me that the price action is strongly upwards. So that's what I'm looking at in MACD. Whereas when I look at the momentum, it shows how many people are buying and selling shares. So the more people who participate, the greater the volume, the greater the strength of the price action. So when the participation is low, that means the price action is not that strong, and that's eventually going to result in the MACD getting weaker. So that's the dynamics out there for those of you who are curious as to what MACD and what the momentum means. So having said that, I think that Allergen looks today to be experience a bit of drop in momentum. Unless the momentum picks up, we are going to look at further losses for Allergen. Intelia is down minus 1.02%. That's around 74 cents. And we are still getting some support from this diagonal green line, which has been a support for this bearish channel for Intelia for the longest time. And we crossed over yesterday and then converted that into a support. And that support is still holding strong, and we are still above that line. Our 9-day exponential moving average is the next support, and the 20-day exponential moving average is now the next resistance that we are tackling. And after that, we'll have resistance at 75.92. The MACD is still bullish, but the momentum is below average and dropping. And that seems to indicate that Intelia is going to lose more before the end of the day. IMTX is down 2.63%. That's around 19 cents. And we have formed an inverted hammer for the green candle, which means the bears are succeeding And the 9-day exponential moving average is also resistance for us now. It used to be a support earlier. We have fallen below that. And we had just gone into the civilization in terms of getting into an acceptable zone for momentum. Now we are turning back down and seem to be falling down. We are very, very close to crossing over the lowest point that the MACD had been historically for this particular share, IMTX. And our MACD is bullish at this point of time. But given the state of the momentum, I think that we are likely to find a resistance at minus 0.59 for the MACD, and we might fall down below it. So it's not looking good for IMTX. RG is down minus 2.82%. We are still having support at 44.39. MACD is still bullish, but the momentum is trying to fall below average. So I'm not comfortable with that. Momentum is still high, but falling below average in my books is an indicator that we are going to lose the MACD, and the MACD will start slipping towards the signal line in a bearish manner. So I don't see much positives for ARCG for the rest of the day. CRISPR is down minus 2.61, and we still have this diagonal green support channel for a potential bullish run. So we also have the 20-day, 9-day, and 50-day exponential moving average that are supporting CRISPR share price. And also you will notice that the 50-day exponential moving average is converging with the 9-day exponential moving average in an attempt to move below it. That's also a good sign. MACD is bullish, but it's tending towards a signal line. That's not good. Momentum is above average, but it's dropping. That's also not good. So CRISPR is likely to face a little bit of negative today, but overall I think it's in a bullish channel. Verve is down minus 3.88%. That's around 97 cents. And we are below the 9-day exponential moving average. Therefore, the 9-day exponential moving average is going to form a kind of resistance for the price here. And MACD is bearish. Though it's moving towards the signal line, it tends to be bearish at this point of time. Momentum, which was moving towards the MACD, towards the average yesterday, is now fallen down, and it's moving down towards the bottom. So that's not a good sign at all. So Verge is going to lose more today and probably end up -1 or more than $1. Editas is down minus 4.03%. We still have support at $15.37, which is the horizontal green line. MACD is bullish, but the momentum is above average and falling. So the fact that the momentum is falling is a negative in my books. The fact that it's above average is still something that's giving me a bit of hope. So unless the momentum turns back to either be flat or above, Editas is going to lose more value. So it's likely to become maybe -1 by the close of the day. Beam is down minus 3.98%, and it has got a stiff resistance from this diagonal red line. It touched it and it came down again. So the 20-day exponential moving average, the 9-day exponential moving average, and this diagonal red line are giving a resistance to Beam Therapeutics. And the MACD is bearish, and even though it is moving towards the signal line, given that the momentum is below average and falling, I think that Beam is not going to see any positives today. Probably it will end up minus 3.25 or something before the close of market. Caribou Biosciences is down minus 5.22%, and more pain in store for Caribou Biosciences because MACD is moving towards the signal line. We just saw the histogram being white for a short period of time, and the momentum is below average and falling, and that's what is going to weigh on the MACD and make it bearish before the end of the day. And our support of 9-day exponential moving average has been breached, and that has now become a resistance for us. So there is more pain in store for Caribou Biosciences. Maybe it will end up minus 0.7 by the end of the day. Teledoc is down minus 4.53%, and we have support from the 9-day and the 20-day exponential moving average. But the MACD is bullish. However, the momentum is falling below average, and that's not a good sign. So I'm expecting the MACD to turn bearish before the end of the day, and we may possibly get a support from the 20-day exponential moving average and then break down below that and stay just above the 9-day exponential moving average before the close of markets today. The 9-day exponential moving average is standing at 63.08, and the 20-day exponential moving average is standing at 64.86. So what I'm saying is that we may break down below 64.86 before the end of the day. PSCB is down minus 4.76%. and the support which we had at 10.37 has been breached and now becomes a resistance. And our MACD is bullish, but it's tending towards a signal line with the momentum falling below average. So PSEB is going to lose more, and maybe it will be minus 0.75 by the close of the market. DNA, that's a Ginkgo Bio works, is down minus 6.07%, and it's got the 9-day exponential moving average as a resistance. And even though the MACD is bullish, it's very, very minor, and the momentum has fallen below the civilization zone, as I call it, and it's looking very bad for DNA. It may lose maybe another 10 cents before the close of the day in my book. So having said that, that brings me to the end of today's session. Let's not despair, because after subsequent days of positive, we are likely to have a day of profit taking, and therefore things fall down a little bit. And I reviewed all the risks that we had earlier, which we should not lose sight of. So I'm not surprised with the pessimism in the market. Thanks for watching this video. Please put a like out there, and please subscribe if you haven't already. And see you in the next session. Bye for now.